Speaking of, Jefferies has upgraded Tesla with a price target that is now the highest on the street.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So it is a very sad day today, folks. Just when I thought Tesla stock was going to get absolutely wrecked and I'd be buying at a major discount, a bunch of selfish stock analysts on Wall Street decided to massively increase their price targets on Tesla stock over the weekend, dramatically softening the blow of the sell-off after news that Elon Musk will be selling 10% of his stake in Tesla stock. So it seems that Tesla stock is absolutely unstoppable. I still did back up the truck and buy as much as I possibly could, but not at the prices I was hoping for. But as we all know, hope is not a strategy. Buying Tesla stock when I think it's got a long way to go, however, is. And I personally think in 2031, today's prices are going to look dirt cheap anyway. So in today's video, I'll be reacting to some of the price target upgrades for Tesla stock from the Wall Street analysts over the weekend. And I also want to discuss the fact that this is just the beginning. And I really want to underscore that point. There are going to be endless price target upgrades for Tesla stock in the coming days, weeks, and months. Mark my words. We'll take a look at the latest research note Jefferies have published along with their new super bullish Tesla stock price target, and I'll provide a very quick update to my all-in Tesla stock portfolio. As I mentioned, I've bought more stock, just want to be transparent and show you guys exactly where I'm at. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it.
Speaking of, Jefferies has upgraded Tesla with a price target that is now the highest on the street, $1,400 a share. We've made it our call of the day. Dr. J, you own Tesla calls, not to mention the extraordinary moves that you've made today in a number of EV-related stocks. But tell me about Tesla first, and then I'll ask you about these others.
Sure. Scott, you and I talked last week, and I think it might have been Tuesday and Friday that we just talked about that rolling up when somebody takes a profit, sells that level, and then buys a higher strike price. 800, 850, 900, 950, 1,000, 1,100, all of those surpassed as Tesla surged to that new all-time high. And each of those, by the way, along the way, a lot of new highs were hit. So I kept taking profits in Tesla. It is now my second largest position.
Just out of interest, let me know in the comments below if you only own Tesla stock, or if you only own Tesla stock options, or if you own a combination. And now let's take a closer look at the note published along with this new price target upgrade from Jefferies, $1,400 per share for Tesla stock in their base case, and $1,600 per share for Tesla stock in their bull case. Quote, "From conceptual to tangible threat, price target to $1,400 per share." And over on the right here, just for the record, guys, the upside scenario, aka the bull case, $1,600 per share, and the downside scenario, aka the bear case for Tesla stock, $900 per share. Let's read on. Key takeaway: like in 2020, Tesla's price is sending a warning of relevance to traditional and also challenger OEMs. With an acceleration of self-funded growth in Q3 and unheard of returns at a brand price point moving towards volume segments, Tesla looks more scaled up today than most OEMs. This is a very important point. In terms of profitability gross margins, they're only at around 1 million units per year in terms of the run rate, and they're already printing more money than much larger automakers. This is a very underrated point. And in position to turn the legacy zero-sum game into a negative one, aka completely eviscerate legacy automotive. Been calling this for a while. Good to see Jefferies pointing this out now as well. We raise estimates 16% across profit and loss and free cash flow, and raise our price target to $1,400 per share. Tesla to industry. More scary near term than bullish long term. Tesla's last 2 sets of results have impressed on all metrics, with Tesla continuing to leverage R&D and SG&A. Adjusted for ZEV and CEO special compensation, Q3 GAAP margin reached 14.2%, mainly from hardware, according to CFO Zach Kirkhorn. Gross margin of 28.8% validates hopes of a more profitable EV world ahead. Just want to jump in here. I mean, again, this should be fairly obvious. EVs have far fewer moving parts, far fewer parts than internal combustion engine vehicles, and it's a very new technology. As production scales up, there's new innovation in manufacturing, economies of scale come into play, and as I mentioned, the very fact that there's less things going into an EV, obviously they're going to be far more profitable at the same price points as ICE vehicles. This is now becoming evident as Tesla scales up. Again, something you could have seen coming from years away, literally, but it's nice to now see Wall Street starting to acknowledge this inevitable fact. Near term, the difference reflects multiple competitive edges which we see lasting longer than many investors think, from direct selling to battery density and cost, software, chip design and chip sourcing, and design to manufacture, altogether avoiding the complexity and inefficiency that are plaguing the industry's business model. OEMs are responding slowly, and only one or two challenges at a time. Slowly is a massive understatement. They're moving slower than somebody wading through a pool of molasses. And guys, make sure you're sitting down for this. Auto domination? We have long resisted the idea that Tesla could sell 20 million units by 2030, 20 to 25% global share, given the industry's size, strategic importance, and political support. We still do, but conviction is weaker, considering the accelerating gap in growth and profitability. Now, I just want to take a moment to pause here, okay? This is the story in a nutshell of Wall Street stock analysts versus Tesla's actual own targets. There isn't anyone on Wall Street today who's taking Tesla's 20 million units by 2030 seriously. None of them, not even close. Even the more bullish scenarios are expecting maybe they get to 8, maybe 10 million vehicles produced in 2030, half of their own stated goal. Now, if we rewind the clock, we'll discover that Tesla has so far remained on track to hit their target. Of course, the thinking of a typical Wall Street analyst is, well, no one else has ever done this before, therefore there's no way Tesla will ever do this. However, as we can see here, Jefferies admitting that their skepticism is starting to wane. What we're going to see over time, you can count on this. Month after month, quarter after quarter, with each new research note published and a new price target upgrade, we're going to see the gap closing between Tesla's stated goal of 20 million units per year and what Wall Street stock analysts think they'll actually achieve. Eventually, later this decade, there'll be some on Wall Street who start to actually go, you know what, they're probably going to hit that 20 million target. The point is, as Tesla proves themselves and continues to scale at a crazy pace year after year, Wall Street analysts are going to go from 10 million units in 2030 in the best case scenario to 11 to 12 to 13 to 15 to 18 and then eventually 20. And as that happens, the price targets increase and the stock is likely to respond to those price target increases as well. This is a very important hint here from Jefferies, admitting they've long resisted the idea that Tesla could sell 20 million units, and they still do, but their conviction has fallen. Without dismissing execution risk, Tesla is getting to a position where it can balance affordability and speed, goals which are as important as profitability in Elon Musk's vision. As the model range and price points move away from BMW or Mercedes towards mid-market, with a yet-to-be confirmed $25,000 Tesla looks set to gain share from large OEMs, potentially claiming a disproportionate share of the industry profit pool in the coming 3 to 5 years, as legacies enter the margin-dilutive EV transition phase. Again, just want to take a moment to expand on this. For those who don't really understand the jargon here, Tesla has reached scale. They're printing billions of dollars in terms of EVs. There's nobody else that's even close apart from 1 or 2 companies in China, meaning the legacy automotive companies are going to be bleeding money, bleeding billions of dollars, losing money on every single EV they make for years to come, in an attempt to eventually catch up to Tesla. And of course, Tesla's moving faster than everyone else, so they never do catch up. So in the coming years, Jefferies is acknowledging here, rightfully, that Tesla's margin is going to continue to increase. The prices of their vehicles for consumers can continue to fall at the same time. And everyone else attempting to compete with Tesla is going to be losing staggering amounts of money, and their margins are going to absolutely collapse. It's not going to be pretty. VW or GM may soon sell more EVs than Tesla, but degrowth in ICE accelerates loss of scale. So keeping in mind as well, ICE vehicle sales collapsing, they lose economies of scale, they start making less and less money in their ICE vehicles at the same time that they're ramping up their unprofitable EVs. It's like a double whammy, getting reamed from both ends. Basically, legacy OEMs are going to get completely spit roasted whether they like it or not. And hey, whatever you're into. Raising 2021 to 2023 estimates by 16%. We raised both growth, 3 million units by 25. I'm sorry, man. I'm just going to leave that in there. I mean, hey, look, they're making progress. Massive underestimation, but hey, better than nothing. We raised both growth, 3 million units by 2025, and profitability assumptions with EBITDA margins 3 to 4 points higher to 16% in our forecast period. We have assumed 1. CapEx scaling from 12% to 6.5% of revenue by 2025 to 10.6 billion or 35 billion to add 2 million units of model capacity, and 2. Negative net working capital supporting free cash flow. Our GAAP earnings per share for 2022 to 2023 is $6.70 to $9.70. By the way, they're way off the mark, but hey, not going to hate, at least they're making progress. Valuation. We raise our price target to $1,400 per share. Valuing Tesla is not getting any easier. Material upgrades in the 2022 to 2025 period help. Earnings momentum is set to remain a multiple of legacy, with the latter's risk profile inversely linked to Tesla growth. Again, just want to talk about this, a little bit jargony, but the idea, the faster that Tesla grows, the more legacy automotive is, because Tesla is eating their lunch. The normalization of Tesla is inevitable, but years away in our view, as Tesla's auto growth and return on invested capital remain multiples of legacies and Tesla branches out. Tesla is trading on 10 times and 75 times 2023 revenue and EBITDA. So in summary there, Jefferies massively increasing their price target on Tesla stock, the bull case $1,600 per share, even the base case $1,400 per share for Tesla stock, and they still don't believe Tesla's going to get anywhere close to 20 million vehicles per year in 2030, but they openly admit that they're becoming less and less skeptical of that extremely audacious target. And the price target upgrades are going to continue to come wave after wave after wave. As analyst after analyst gives Tesla a little bit more credit, they still remain skeptical because they're a bunch of pussies. They don't believe there's any chance in hell that Tesla's going to make 20 million units per year in 2030. Not even close. But as they see more evidence, wow, they're executing better than we thought. Their margins are better than we thought. They're printing more money than we thought. They're increasing production faster than we thought. EV adoption's happening faster than we thought. We're going to see endless upgrade after upgrade after upgrade. And I do just want to point out, generally speaking, when the geniuses on Wall Street upgrade their Tesla stock price targets, Tesla stock tends to go up. Doesn't always happen, and this certainly depends a lot on how reputable the Wall Street analyst is who's upgrading their price target. But the point is, more often than not, an analyst upgrades their price target on Tesla stock, news breaks, then people buy the stock because some people need to be told by the Wall Street geniuses that Tesla stock's headed to the moon. I guess they haven't heard of Twitter or YouTube. I'm just kidding. What does anyone on YouTube know about Tesla stock? I certainly know absolutely nothing, and that's why you should definitely not sign up to Patreon using the card in the corner or the link in the description to gain access to my up-to-date Tesla stock price targets over the next 10 years, because they're going to be completely wrong. I don't know what I'm talking about. Definitely don't sign up. I've definitely never been right about anything I've ever had to say about Tesla, especially Tesla stock. So please, you'd be wasting your time and money. Don't sign up to my Patreon. You don't want to see my Tesla stock price targets. Total waste of time and money. Now, let's head over to Twitter. Great tweet from Gary Black. Quote, "There are 29 Wall Street analysts out of 44 who have buy ratings on Tesla stock. The average price target of those with a buy rating is $1,012 per share, which is 20% below the current price. This makes no sense. No shit, Sherlock. Since you can't recommend a stock where you think the price is going down, buy price targets have to move higher." We can see here in orange the 12-month price target average versus the actual price of Tesla stock. Huge disconnect. This gap will close. Gary's right. All right, class, who's been paying attention? What is likely, not guaranteed, but likely to happen to the price of Tesla stock every time a Wall Street stock analyst upgrades their price target on Tesla stock? Let me know in the comments below.
Good morning. Good to see you.
Hey, good morning. Good to see you as well.
So increasingly, the sell side's been arguing this is a self-funded growth story. It's a revenue story. It's a margin story. How much gets complicated by a sale of stock by Musk?
I don't think any. I mean, from a fundamental perspective, I don't think it changes. If anything, I think through this strategy, if we can call it that, Musk has taken off the narrative that would have been purported of something wrong in Tesla that's causing him to, exercise those options. So if anything, I would say it's a net positive.
What do you think the story is right now between Tesla's growth trajectory and the incoming wave of competition, some believe, from legacy OEMs? How much white space is there, and how much do you expect it to compress, if any?
Well, I think you're going to continue to see competition. However, having run a division of a Fortune 500 myself, I will say that what Wall Street still fails to understand, and most investors, is the role of culture. And the challenge that the traditional OEMs are going to have is not can you build a product that's as good as Tesla, but how do you change the culture that enables the ability to keep building products as good as Tesla?
This is actually a very important point from Jed. Tesla's culture could not be more different from a legacy automotive manufacturer. At Tesla, if you don't rock the boat, if you don't innovate, if you don't share your ideas, if you don't challenge a senior manager because they've got a dumb idea and you realize it's foolish, you will be fired. The literal reverse is true at a legacy automotive manufacturer. The cultures are polar opposites. This is why Tesla's executing like crazy. This is why they're a lean, efficient, profitable machine. And this is why legacy automotive manufacturers are f***ed. No amount of needing to change is going to actually invoke the cultural shift. This would be like expecting a needy, nice guy, basement-dwelling, adult virgin, beta-orbiting pleaser bitch to suddenly become irresistible to women the world over because you said, hey dude, something needs to change. And he said, okay, I'll change, no problem. Yeah, not gonna happen, sorry.
It's not one thing that the company does, but it's all these little things that add up to a big difference. Starting with whether it's the battery technology, the 4680 that they're bringing in, or the inverter using silicon carbide. There's a lot of things that allow Tesla to maintain an advantage. And I still see that white space is pretty far.
Jed, it looks to me like price targets on Tesla keep going up because the stock keeps going up. And it seems like that's not how it's supposed to work. So what do you have to believe differently about Tesla to have, say, a 1400 price target on it versus, what seemed like an ambitious, say, 1190 price target a couple years ago?
Yeah, I mean, remember, we were one of the first that came on with, I think it was, I put a price target of, I think, 500. And this was before the splits where it looked at it as crazy and the bulls on Tesla. It's a little bit, it becomes a self-fulfilling prophecy in terms of the stock moving up and you see things follow. I think the net takeaway is you either believe that fundamentally Tesla has an advantage in the market and the market is shifting over to EVs. And beyond that, it's an energy story, which is kind of our thesis. And if you look at it that way, I think there's still room on this one.
As you know, I am in agreement with Jed here. I think there's definitely some room to go on Tesla stock. Quite a bit, actually. After all, I just bought a bunch of Tesla stock today, close to all-time highs, way above the highest price I've previously paid for Tesla stock. We'll discuss those purchases soon when I give my portfolio update, but I really do mean it. I think that these prices are going to look dirt cheap in 2030 and beyond, so I'm buying with every spare cent, still.
Hey, finally, Jed, on chip shortages and supply crunch, so there was some work last week done on October global sales, inching up just enough to make some argue that maybe autos would be the first industry to recover, not fully, but at least directionally start improving on supply. You agree with that?
Yeah, but I would say for Tesla, it really doesn't matter. I mean, one of the things that Elon did is reprogram the coding so that they wouldn't be exposed to the chips that were in shortage. That came out when Deese over at VW had Elon talk to VW. So we're seeing a lot of things that are just a bit out of the normal, and I think great for kind of leading this industry forward.
So I am putting my money where my mouth is in terms of Tesla stock. Let's have a look at my all-in Tesla stock portfolio, and I do literally mean all in. Here's the latest look at my stock portfolio. Still only own one stock, all in Tesla, 6,075 shares. I purchased 49 shares of Tesla stock today. Slight delay on my funds transfer, so I wasn't able to buy at the open like I was planning to. Still picked some up, average price about $1,184 per share. This has bumped my cost basis up now to $158. Still relatively low in the scheme of things, but I honestly don't care about my cost basis. I care about the future, not the past. So my cost basis is completely irrelevant. Just for the record, my cost basis has approximately doubled in the last year or so because I've continued to buy as Tesla stock is more than 10x'd. My money's not going as far as it used to, but as I continue to point out, I still think that in 10 plus years time, the prices that Tesla stock is on sale for today are going to look dirt cheap. By the way, let me know in the comments below, did any of you buy Tesla stock today? Stock portfolio value a little bit over $7 million US. Obviously, this fluctuates enormously depending on what Tesla stock is doing, but as I said, I'm fully transparent, wanted to give you guys an update every time I buy Tesla stock, I'm going to let you know. So I hope you guys have enjoyed this video. As I said, I can guarantee you there's going to be many more price target upgrades to come, so stay tuned for those. Jefferies now, I believe, has a street high price target on Tesla stock at $1,400 per share in the base case. and their bull case, $1,600 per share. And in case anyone's wondering, my Tesla stock price target, my base case, and surprise, surprise, my bull case price target for Tesla stock also significantly above their bull case price target. Like I said, if you'd like access to the up-to-date Tesla stock price targets, check out the card in the corner or the link in the description to join Patreon. You'll also get access to a ton of exclusive content, videos, perks, and more. And if you're broke or tight, or both, no problem. Like I said, I personally believe Tesla stock's still a very long way to go. Make of that what you will. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.